Hi everyone, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First, before we look at the FANGs, thanks to everyone who likes this video and all our subscribers. As I noted last week, we are almost at 800 subscribers on our YouTube channel, and if you haven't already subscribed, please do so, as it would be great to get past this milestone. I appreciate your help with the YouTube algorithm, as this allows us to bring you more and better content, so thank you for that. Second, to reiterate last week's introduction, the possible breakout signal for the S&P 500 remains rescinded, at least for the time being. This has implications for the FANGs, obviously, as we will see in a moment. Third, there's been some interesting stuff going on in the market with GameStop, AMC, and BlackBerry. And by the way, who knows what else may follow. So when we're finished with looking at the FANGs today, the serious investors can shut me down. And I'll take a few minutes and show the rest of you what those stocks look like and whether or not you could have found a good reason to climb aboard. Anyway, now down to business. Well, let's see. The FANGs were looking as if they were not ready to give up their place of honor as market leaders, but they are also prepared to mark time by refusing to confirm this potential market breakout, and rightly so, as it turned out. Finally, a reminder, our SVA introductory webinar 2 weeks ago on the SVA methodology is available to all of you. If you want to watch a recording of it, you can click the link in the description. For now, let's cut to the chase and take a look at what has happened in the past week and how things are shaping up. Well, the first one we want to take a look at, as usual, is Amazon, and it just sort of continues to float along just above its HB3. Not much we can say here. It looked as if it was sort of trying to get into gear a little bit, but the stock would remain in our hypothetical FANG portfolio. Apple, well, this is quite interesting. Apple just reported, and of course you know that they reported some pretty good numbers. However, we do not have the new balance sheet in, and so that swing up in the balance sheet that you see from October 2020 on, okay, is probably phantom. And indeed, we did take a quick look at the balance sheet itself. It is not, our database supplier has not put it in yet, but we did take a look, and we noted that the book value of the company has actually not changed from that October the 20th number. So the downswing in prices has not actually occurred. It's simply gone flat. And that would suggest, therefore, that that price there, the bottom there, which was $150, probably is going to be the new HB5. Well, the stock has reached, I think, a high of about a little over 140, so it's pretty close. But it has not actually broken out yet, so Apple is actually getting up to the top of its range. And remember, a few months ago, back here in August, the stock actually peaked out at its HB5, so it's there again, or very close to it. Finally, the third stock in our Phantom FANG portfolio, as it were, it was Facebook. And I had, remember a couple of weeks ago, I said as it comes down to its MSG price, I would buy the stock. Well, hypothetically, we did. The stock actually broke a little bit below the MSG price. That's 5.5 times book value, but then it got itself back on side again and looked as if it was confirming, maybe not so much the breakout, but confirming the rebound. Well, unfortunately, today that has not proven to be the case, and the stock actually has drifted a little bit below the MSG price. So it remains in our portfolio, but we remain a little cautious here. Microsoft broke out, has not confirmed as of yet, and I said before we would put Microsoft in the portfolio, we would need to get a breakout and a pullback, in other words, a confirmed breakout. It's still very, very slightly above that breakout point of $232, but it's unconfirmed, and I would be very cautious about taking a position until we get a confirmation. Alphabet came right up to its MSG price again. Remember, 5.5 times book value, as it has actually done really 3 times basically in the last quarter. But again, it has not been able to break out, and therefore our sell on the stock remains in place at its MSG price. Netflix, well, they had those terrific numbers. The stock jumped. In fact, it jumped right over the HB4 price. That's 20 times book value. Couldn't hold. Stuck there for 3 days, and then that was it. So my concerns about Netflix remain very much in place. NVIDIA, well, as you know, I have not cared for NVIDIA for some time, and it just kind of drifts sideways. And that's really peculiar, because the fundamentals of of the stock and the semiconductor industry would appear to be very strong. But we have not yet got a recovery to, and we may not. So I'm remains out of my portfolio and very cautious. In summary, what I might call my FANG portfolio, Facebook remains in the portfolio. That's the third one there, but with some some concerns. Amazon, of course, following our buy-in the day before the U.S. election. That's there. Apple, my third holding, following our last SVA signal on the stock at the old HB4 price, of course, which you can't see anymore due to share buybacks. Remains there, but that's very, very close to its HB5, so I will be watching very, very closely to see what happens. As far as Facebook is concerned, however, we've got that 3% 5-day rule for breakdowns. Okay, after a little scare, it had pulled itself back on side, but now I'm concerned that the MSG price might not be holding either as of this morning. So don't become overly complacent if you own the stock. The stocks that I would not continue to own at the present time, but I'm on high alert about, the first is Microsoft. I kept telling you I would buy in a clean breakout and a check bag. Well, we've got the breakout, but I would wait. It looks interesting, but it has to confirm. Alphabet hit its maximum visible upside target perfectly, as it has 3 times in the last 3 months. And as of last week, it was knocking on heaven's door again. But this week, and notably today, the shares have really set back. So any buying opportunity remains in the future. Netflix fooled a lot of people, including me, after those blowout numbers, and it leapt to give us a possible buy signal, but there was no confirmation. So I would not be buying right now. Finally, NVIDIA, despite those good industry numbers, has simply refused to come close, okay, even perhaps possibly to offering a buy signal, and it remains in my doghouse. Last week, I left you with 2 takeaways. First, Would the new super growth price for the Standard & Poor's 500 be attained and then hold? And secondly, to watch those FANGs, notably to see whether Netflix could hold its breakout and whether Alphabet and Microsoft would follow suit and therefore confirm the market breakout. Well, this week is why we exercise patience. We did not get the confirmation numbers. I then added that the FANGs looked as if they were getting back in sync with the overall market. Remember, they'd been the market leaders for 10 years. Well, this week you may well add, and which way is that, Ross? Because right now we don't know. Okay, serious FANG investors, I'll see you next week. Okay? For everyone else, let's see what you missed in the wild world of Reddit and Robinhood. And let's see whether you could have caught any of those moves using SVA. We'll be taking a look at GameStop, AMC, and BlackBerry. Let's start with GameStop, and look where GameStop, this is a 1-year chart of, a 6-month chart of GameStop, and look where the stock started. Okay, it basically broke out over what we call its blue price. Now, I know that all of you FANG Friday watchers have never seen the kind of the lower 40 of the breakpoints that underline SVA. But way down here, down what we call its blue price, is what we refer to as basically the breakpoint which separates out the companies that have balance sheets which are confirmed by the market and companies which have balance sheets that are not confirmed by the market. And for a while, GameStop was in that position, and indeed, of course, you can see why, because the book value per share, well, that's by the way, that's the green line here. The book value per share was falling, so small wonder the stock got down there. Well, once the stock broke out, okay, it was cheerfully on its way, and you can actually see how nicely that stock traded. Broke out above its book value, got up to its growth price, twice book value, and then just took off like a scalded cat. In all of that period, of course, look at that. The balance sheet has continued to fall. There is no confirming earnings and therefore fair market value. So fundamentally, what we're looking at is a pure speculation. If I look back in history at the company, we can actually see that at one point the stock actually was a lot higher. This was a growth stock at one point in time, but then you can see the balance sheets leveling out, and as the balance sheet leveled out, the valuation and price to book terms began to fall and then became sharply negative as the stock fell into that blue zone that I talked about. Well, it's blown out from there and gone nuts on the upside, but in terms of being able to actually identify the value in the stock, that is another question altogether. AMC, actually almost the same story. Here's the stock actually looked at it. The thing bottomed in, in December at its blue price. Okay, in other words, just before falling into to its own blue zone. And small wonder, by the way, that it got down there, because over here on the right, I show you the estimated earnings per share of minus $5.31 per share. Well, never mind all of that. The Reddit crowd has jumped on this stock and has just piled the stock higher. In fact, it got up to its book value. That's the end price. just leapt over the growth price and got up to this MSG price, and that, of course, is the peak where Google is trading. And of course, here's the long view of AMC, and you can see the balance sheet disappearing. Well, if you want to buy that kind of stock, I would have to say good luck. The one stock which had done very well, and which I actually would have some sympathy for, is BlackBerry. And you can see this stock bottomed in March at its blue price. So there we have three stocks. There are three of the Reddit stocks that have bottomed at their blue price and have done very, very well since that time. Now, BlackBerry got into a nice trading range between what we call its high mid and its high conservation price. By the way, that's 1.5 times book value and 1.2 times book value. But then here, this breakout here, the jump here, that was due to the deal with Amazon. And if there was any good intrinsic potential in BlackBerry, in its QNX automotive hardware, and of course its Ivy operating system, then it would very much appear that that Amazon was confirming that. Well, the stock has had a powerful run right up to its bubble price. That's 7.4 times book value before getting really hit today. As I say, looking at all of the patents and looking at its technology, this is the stock that I would have the most sympathy with. We did not recommend it to our clients because, of course, we couldn't see any earnings there, but certainly the potential value was there. So what did all these stocks have in common? In the last 12 months, they all traded down to their blue price. That's a price-to-book ratio of 0.6. They all had some potential, although in no case did the analysts forecast a recovery. Okay, BlackBerry was the one stock that I sort of like for its possible potential, but not enough to recommend it to value-oriented clients. Now, you can find lots of these stocks in our database because we have more than 3,000 different stocks. And maybe there are more on the way into the Reddit Robinhood orbit. The energy stocks in particular may be one area that you could keep an eye on if you would choose to subscribe to our SVA service. Some interesting stocks down there. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools, as I trust we have been very clearly showing you. I'll see you next Friday.